Okay, good morning, folks. We are live for the opening bell and we are off. Okay, so we had the PPI data, which came out today, came out hot. The revisions were hot. What are bonds doing? Bonds are rallying with the 10-year yield. Lower left here screen is pulling, it's actually up, but off the highs of the session. So it appears as though at the open here, they're kind of dismissing that hot data. Now, we shorted earlier the Russell 2000 just before the PPI print. We booked profits there. So we made our cash for the day. We rallied back right here. And then I opened up a 0 DTE call spread, basically, again, putting us short, but not as aggressively short as what we were earlier. So we've made our profits for the day here. I don't plan on staring at the screen all day long. I'm going to hit the pool in a couple of minutes, to be honest with you, gym and then pool. And you're seeing the NQ, that's the triple Qs rally now. They're now green, where the Russell 2000 is still positive. It's coming off of its highs. So looks as though you're getting that dead cat bounce into the larger cap names. We'll see whether or not it holds. We'll set up a couple of alerts here on the NQ. I want to know if we put in new daily lower lows. We still have a short here. We spoke about what could be happening on the NQ in the next day or so, next couple of days, I should say, where we could rally back in an effort to try to recapture prior support. Ultimately, I think that it fails and the smaller cap names will rally. Now, last night on Thursday Night Stock Charts Live, we spoke about the yield curve. And I'm going to do a refresh here because it steepened again this morning. And I'm looking at CNBC's website. The 2-year is down, where the 10-year is up. So we're seeing a continuation move higher on the yield curve on the week. So that doesn't mean that NQ just took out regular session lows. That doesn't mean that we're going to go straight down, but it just means that fears of recession are growing, and we need to be careful of that. We had big bank earnings that came out this morning. We'll kick it off with JP Morgan. JP Morgan, wow, this turned over, down nearly 2%. Wow. Wells Fargo, their earnings were not met. I know that JP Morgan had to raise loan loss reserves. That's probably why. Look at Wells getting destroyed. Wells Fargo down over 7.5%. That's a huge move. Look at the volume. Let's check in with Citi. Last I looked, that was up. Now down at nearly a percentage point. So the bank's coming under a lot of pressure here today. Money's still trying to find safe haven in the triple Q names. Let's check in with a few of those. Tesla was in the news today again. That's down 3%. Apple, that's up a percentage point. NVIDIA, that's up nearly a percentage point. SMCI, of which we have a position in, that's down about a half percentage point. I can't catch a break there. We sold puts a while ago. You know, we're profitable on it, but there's like no time decay. They expire August the 2nd, right before earnings. It's just like I can't catch a break. What else do we have going on here? Let's bring up the Google. The Google is up a little over a quarter percentage point. What else do we want to take a look at? A couple of names that were looking good. Transport names that are showing strength. CNX is a railroad company. That's up a percentage point. Let's go daily view here. Why is this not loading? There we go. So you have a Bollinger Band squeeze that's firing off now. I think I'm a little bit too late to the party on this one. Hey, Franklin, good morning, pal. CNX. Let's check back in with the rut. At some point in time, we're going to reestablish a long position here on the futures, but not right now. I mean, if you take a look at a daily chart, let's change this to a 3 standard deviation Bollinger Band. It's just not something I feel comfortable with reestablishing a long position at current. We closed out the day yesterday and a continuation day today above the 3rd standard deviation Bollinger Band. In short, we're not supposed to be there. So we're going to get a reaction to the downside. Could be today, could be tomorrow, could be next week. I don't know. But right now, we're going to sell deep out of the money premium here, meaning sell deep out of the money calls and just try to collect some premium to the short side. But what I like to call over the horizon, shorting of the rut. It got overextended this morning, so I shorted the futures. We made some money there, but we're out now. But I did sell a call spread just so I don't have to stare at the monitor all day long. So that is the rut. Still a good looking chart, but we are going to get a pullback. What else? Oh, let's check in with what sectors are doing well today. First, let's go to the heat map. Microsoft down, no great shock there. Financials, these credit card companies, they're up. Consumer discretionary up. JP Morgan had some good words to say in their earnings call about the consumer. You're seeing consumer discretionary names. They broke out last week, reversal this week. I think the culprit for the pullback is Tesla. You're seeing the industrial names rally. Here's the transports. More consumer discretionary. Staples doing well. Drugs doing well. Mixed bag on the semiconductor names. I'm surprised the cyber plays, the cybersecurity plays are not doing better. You had a big leak out of information, a hack out of AT&T, and I would have thought they would have caught a bid, but they did not. Could be because it's old news. Let's check in with individual subsectors. Okay. So we have the mid caps really, really performing well here. Small caps right behind. And we have Dow Jones behind them. S&P 500 bouncing back a bit today. Drugs up a percentage point. Qs up. Discretionary names strong. What's lagging here? Gold, oddly enough, is down. So it turned over because of the hot inflation numbers. I think that's wrong. I think this is an opportunity to buy gold. And the reason is that the Fed Watch tool is still saying that we have a 96.3% probability of a rate cut in September. So that PPI report did nothing, absolutely nothing to derail the probability of a rate cut in September. Small caps bouncing back here. What else is down? Volatility, obviously down. Bonds now down. Huh. That's the 20-year. 10-year yield now positive. Oil down. Dollar down. We need to take a look at gold for a moment because this could be an opportunity here. Gold down. It's off of its lows. Gold down over a half percentage point. Let's go 4-hour view, get that macro picture of the intraday price action. I'm going to set up an alert here. I want to know if this breaks out. That's actually wrong. All right, we're good to go there. So I'm not going to do anything here until we get an alert that fires off saying, okay, we're good to go. Q's caught a bid. Let's go back to the Russell for a moment. Russell is a bit stagnant right now. Volatility is just cratering. So it looks as though we just made new session higher highs on the Qs. Looks like they're going to go up higher. We may get a pause here on the Russell 2000, but still up 1.14%. Again, we're currently short of it vis-a-vis a credit spread which expires today, 0 DT options. So nothing aggressive, and we plan on reloading up on our speculative position on the Russell 2000. We do own a S&P 600 small cap fund, which we've been adding to dollar cost averaging. Let's see if we have any questions, and I'm going to log it off, let you folks go about your business. That's it. All right, folks. Have a profitable trading